Good afternoon, this is Bob Iacchino coming to you from the CME Group trading floor in Chicago. Talking energy futures, let's talk crude oil. Crude oil getting above $66 today. First time it's been up there in 3 years. We had 66, spot 66 as the high on the futures contract. We're settling well above 65.50, but again on the highs above 66. First time we've been there in 3 years. Still focused on the inventory draw we saw yesterday. 1.1 million barrels of inventory pulled out. Expectation of 1.6 million, so we missed on the actual draw, but again, inventories in Cushing are the lowest that they've been since February of 2015. So that 10th straight week of inventory draws is still pushing price higher, and that is significant. We are not going to have the supply coming from the U.S., even though we expect to see the U.S. rise above 11 million barrels next year. This year, 10 million barrels is easily going to be surpassed. That'll be a record here in the U.S. in terms of production, but we're getting such consistent draws out of inventory now that it's going to be difficult in the short term to refill those. We're not going to get a lessening of demand as we go into the summer driving season here in the U.S., which we're not near yet, but it is the next seasonal occurrence we have. When we get into that, we're going to have demand increase, and if they don't start replenishing these supplies of crude oil, it's going to be tough to get prices back down. I mentioned this before, short term, fundamentals are bullish for crude oil. Long term they're bearish, but short term they are bullish. Again, helping all commodity prices and helping crude oil as well is a weaker dollar. Thanks to Steve Mnuchin talking the dollar down, essentially. That is helping commodity prices in general. Steve Mnuchin said he was okay with a weaker dollar, which helps trade. This is a sort of trade-focused, U.S. first executive branch. Steve Mnuchin works for that executive branch. So him talking down a dollar, while not surprising, was taken pretty harshly for the market as the dollar index extended the losses. Dollar index down over 2% since breaking the September lows around January 12th or so, down over 2% on the overall index, helping put a floor under all commodity prices. Crude is no exception to that. Again, above $66 today on the highs, first time in 3 years, settling above that 65.50 support. So it looks like we've still got more bullish upside after a possible little pullback here in crude oil in toward the end of the day. This is Bob Iacchino talking crude oil futures from the CME Group trading floor in Chicago.